Good afternoon. We're starting. We are on.
What happens when you play it 10 minutes beforehand?
I know. Come on, Dan. Come on, super producer.
Mic check.
Hey, guys. Facebook, thank you for coming. We're here today. Perfect. We're on now, looks like. Welcome to CSC, All Things
Real Estate,
Mortgage,
and Insurance
Podcast. All right. We are at Season 9, Episode 5, How to Reach Us. Email info@cscallthings.com or phone number 540-300-6277.
Almost not by heart now. I was saying that as you.
There you go. Good. So, yeah, we got some, today I feel like we're going to have some good follow-up, get some stats. Chris has got a great topic for us, and he will be the carrier us through to the end. Who wants to start off with the scuttlebutt? You got anything?
I got a couple.
Yeah. Go ahead.
My first scuttlebutt I'd like to go over is that a lot of insurance brokers don't talk about that I want to put out there for clients, whether you're on the personal side or on the commercial side. Us as brokers now have relationships with what's called premium finance companies, right? So if you're a commercial truck owner, or if you have salons, barbershops, restaurants, right? HVAC, small business owners. Also, on the personal line side, if you are a high-risk client, what a high-risk client is mean, you have a certain amount of accidents within the past 3 years that would drive your rate up. Or you have a certain amount of tickets, right, that just makes your premium so high and you still need insurance. When you go through the traditional insurance premium and the down payment and the monthly payment could be a little too high out of your reach. Because accidents and stuff, sometimes it's your fault, sometimes it's not, but insurance rates are just climbing so high when it comes to claims and risk, and you still got to have insurance. So when you have premiums from different companies that just seems too high and it may be unaffordable or out of your budget range if you're a commercial business owner, what premium financing does is take that same premium, breaks it up over a longer time, all right, can probably give you some better rates,
Okay.
all right, and you pay the monthly payment through the premium company, all right. So what that does is, say I have 5 cars, my home, but I live on the coast of Virginia Beach, and I've had like 3 water claims. Man, a lot of insurance companies not going to take me, but you will find what's called E&S companies that take on high-risk clients, all right? But an average premium for that scenario for auto and home in Virginia Beach, say it's $4,000 a year, but with the claims and stuff that I have is about $13,000 to $14,000 a year,
Right.
which makes my auto payment over $1,000 a month. I could go through a premium financing company and probably get it at $500 a month.
Right.
All right, which helps out. Also, as a business owner, I was discussing with one premium finance company. They do choose some banks that will also at the same time help you with your small business credit.
Okay.
All right, so using a premium finance company is a advantage at times, depends on your situation. So you sign up with the premium finance company, say the premium is $15,000, that premium finance company will send the $15,000 to Travelers. Now that they've already paid for their insurance policy for the year.
Right.
And now I'm paying the premium finance company. You know what I mean? So it could be a very benefit on interest rates. However, it's also a benefit that you could get a lower monthly payment than if you would go through the insurance company directly.
Okay. Now, and I guess another whole podcast is, how to keep yourself getting in that situation, because if you let your policy, it's probably a good example is, if you have those kind of scenarios, you've got claims, this, that, and the other, you should do everything not to let your policy lapse,
Correct.
right?
Correct.
If they want to kick you, if they want to cancel your policy, let them do it, but don't give them an opportunity by falling behind or something like that, right? But wow.
But now on the flip side, there's some insurance companies that would give you a better yearly premium than your traditional. The premium company would give you a better premium for the year than an insurance company would, and you can get a better interest rate. So you may rather at times go with the premium route finance amount than paying through the insurance company directly.
Okay.
I have a question. We had a scenario where flood insurance was
Can I say
needed.
that?
So tell me, this is nowhere near water. Why would a flood insurance be needed in that case?
Good question. I went through that about 4 years ago, where my mom, my pops live in Rocky Mount, North Carolina.
Okay.
Same scenario. Rocky Mount, North Carolina is near nowhere, right? But how the town is built, they had 3 years in a row, they had some bad storms that created flooding
Okay.
and messed up the whole town, all right? So the type of risk and claims that was made, it was astronomical for an insurance company just for that one zip code.
Right.
Okay, so since it happened in a multiple period, consecutive years, the county now had mandated that when you have a home ownership, you do need a flood policy.
Yeah.
Okay.
So the areas that you're talking
Yeah.
about, if they looked at the whole scope through the past
Yeah.
5 years and had more flood issues than none, there's now going to be a request. And you don't even have to be near nobody of water. but
None.
How the town is built, how
Right.
the foundations
Flood
is
plan,
done.
whatever, yeah. So she's talking about it, it's like one of our clients, and I'm fighting, I'm like, to the underwriter, this is not in the flood zone, there's no you need water.
Okay.
I couldn't understand it.
Okay.
So, but then the appraisal came back, same thing. So, FEMA, they said the FEMA flood cert, and they're in zone A. So if you're in zone A, you get that, not zone X, right? I'm like, well, how is that possible? So then we dug a little deeper, and they changed it in September 2023.
There it is.
Makes
There it
sense.
is.
So you need to check that. You think you're living good, that's
Yeah.
another cause.
Yeah.
You may, not because you're near water, like you said, but when it rains hard,
Yeah.
it could just flood.
Right.
And thanks for that, because there's certain coverages for your type of area, you don't need there's different rates, different coverages.
Okay.
So
You're
in
not
your
on
scenario-
the water.
Right, in your scenario, you could get the basic coverage that comes with it. And I'll break that down on our next podcast, and it's about flood insurance. That's
Perfect.
Thank
Good
you.
stuff. Good stuff. You got any scuttlebutt?
So my scuttlebutt is, so obviously it's, we're fast approach, it's summer, right? But there are still plenty of people that still want to sell. So, but I get the question all the time, should I wait? Should I sell now? So on July 22nd, I'm hosting a virtual Northern Virginia seller seminar.
Nice.
So we're going to cover,
Summer.
we're going to cover, it's virtual, it's not in person, it's virtual. So we're going to cover, number one, how do you prep your home? What are buyers looking for specifically? We're going to talk about the actual statistics of the market, so you can stop listening to national news. So if you know of anybody who's, the keywords to listen for are, I'd like to sell, but I don't know what the market is. I'd like to sell, but I don't know what to do in my home. I'd like to sell, but I don't know what buyers are looking for, right? So I'll put some information in the tag for this.
Okay.
We'll talk about it obviously next week. And I've done them around noontime. This one's gonna be at 7 p.m. So you can get off the road, feed your family, sit back in, come back and get some knowledge.
Nice. What is that again?
This the 22nd, July 22nd, at 7 p.m.
Be there, be square. Okay, I'll just talk a little bit and then we'll go back to whatever. So I have some stats, guys, about the market. I think it's pretty interesting. All right. So this is off the mortgage news. They're talking about the mortgage industry is currently dominated by AI-driven underwriting. What does that mean? That means this person's not looking at your documents. They have a threshold, a line. If you fall into this box, they're basing it on that. That's good and bad, right? It's good when it's good, it's bad when it's not.
Yeah.
Because I believe eyes need to go on that. You know what I'm saying? There could be a reason why this is happening.
Yeah.
But that's how we are today, okay? And there's also a big surge in home equity products, right? People are getting second trust. The HELOCs. They don't want to mess with that 3%.
Absolutely.
But they still need funding.
Yeah.
So I'm doing a lot of those now. So that's a good thing. And one thing I want to talk about, some bounce back, why 3 and 4 prospective buyers are sitting out of the market, okay? What they're saying is this: home ownership still ranks among America's most deeply held financial goals. American dream, right? That's been pushed forever.
Yeah.
All right. For most who plan to act on this year, it stayed out of reach. they're basically saying the number one reason they're staying out of it is price and interest rates. Okay, and that's kind of common sense,
Yeah.
right? You think about that. It says that Harris poll from June 4th to 8th among 3,047 U.S. adults found that 74% of prospective home buyers say financial obstacles prevented them from buying this year. Right?
And it's
Yeah.
interest rates and pricing.
Pricing, yes. Yes.
You know,
What is considered a financial obstacle?
What is one, right?
Well,
I think it's the price of the home, cost of the mortgage, monthly mortgage payment. Could be an array of things.
What about not having a down payment?
That's
Is that
a financial obstacle as well.
yeah, but I think, and you know, this is certainly not to knock anybody, right? You know, you don't want to kick a person when they're down, but I'd like to know how many of those people had counsel way back when people were saying rates were high. You know, what was the saying, Deb? Marry the house, date the rate, right?
Absolutely.
How many of those people sat back? Oh, I have a gentleman I met about 18 months ago. I'm just waiting for the market's going to have a downturn. I'm waiting for prices to drop, right?
Right.
That people who thought that, and now they see that what prices continually tend to go up, right?
Well, I got a question, Chris, because that's a good point you brought up. So how do you get that type of, not everyone is like us that believe in the value of a client, and education is so
Yeah.
important to a client. If they don't know Chris Logan, right, and that's what you say
Sure.
and believe in, same as Sean and myself,
Yeah.
how do they get that type of education?
You know, here's the thing, and I'll tell you this, and by all means, first of all, foremost, we help everyone, right? Nope, doesn't matter the price point.
Doesn't matter.
If they're not in a position to buy for credit or savings, we get them there, right? So this is certainly a knock for anybody that chose to wait. But the reality is, years ago, when my parents first started in real estate, agents were the gatekeepers of information, right? You know, we used to do everything. You know, we pre-qualified before we even called the lender, right? We had your documents, we had everything. We sat down there, got your debt to income. We had the factor sheet to calculate all that stuff. Now we move forward, and there's so much information out there for consumers, right? You know, about loans and mortgages and insurance. Now you have AI. That unfortunately people sometimes don't put the same value on your expertise,
I
right?
get it from anywhere.
Yeah.
So and so, you know, we do a lot of business, right? A lot of it's repeat business, but a lot of it is referral business,
Right.
and sometimes that referral business is valid, right? But sometimes people they don't necessarily trust you and believe. So what I'm saying is, I think the first place we have to start is, if you're going to start with somebody, find somebody that you truly know and trust, right? Don't, you know, you can Google, you can find somebody who's got 5 stars, this, that, and the other, but start with your circle of friends first.
Circle of influence.
People that have bought and sold, ask them what experience they had with that agent, with that lender, with that insurance person.
Right.
That's the best barometer that you're going to have,
Yeah.
right? Because you know that they're going to give you the education, the information that you need. So, because sometimes, I have folks that I talk to, and, you know, in the same boat. You know, people just have a disbelief that prices are going up, right? But so going back to the original thing about people saying it's a financial, for some folks, right? You know, and Sean, you remember it was a year ago, we did a comparison on if you didn't buy a house at 600 and you waited for the rate to drop, at the time was 7.25 to 7.5 or 7 or 6.75, but that house went up 40K, right? You still were end up paying more for the house,
Exactly.
right?
Right.
So, you know, I would say, I don't doubt that those numbers are true, and I think the only asterisk I would put on that about interest rates, I would say perceived interest rates, because there are still people that go, rates are high, right?
Yeah.
Higher than COVID? Absolutely. Higher than maybe when someone bought a house 2.5, 3 years ago? Absolutely. Are they historically high rates right now?
They're not.
Historically high?
Not at all. Like I always tell people, I bought my first house in 1996, the rate was 9%. You were not 9%.
Right.
You see what I'm saying? We're still in the high 6s.
Yeah.
Okay?
Your parents were that.
My parents already financed them. They're at 14. Okay?
I think it's like when people hear other people's testimonies, it's
That's
like,
the problem.
well, why can't I have.
It's
Yeah.
always been the case.
It's always
been the
that.
case.
Yeah.
It's always been the case.
So I just want to say, if you're this person, right, you're on the fence, you listen to the news too much, you need to talk to a professional, one of us three, because we're going to break it down for you, okay? You wait, what are you waiting for, right? It's always about payment. I'm waiting for rates to drop, but what does that mean to you? You know what I mean? What is your threshold for payment? Can you afford $2,500 a month? What is it? Rate might not have anything to do with that. You see what I'm saying? You just hear that number. Oh, my neighbor got 3.4. Well, you're never going to get 3.4.
Yeah.
That's them. You know what I'm saying? It's like when a person, you have a new client wants to buy a house. Well, Uncle so-and-so bought a house in 1975 and they're giving them advice. It's not the same.
Yeah, and I know I don't have to keep repeating this, but it's not always safe and smart to go with the cheaper rate or the cheaper price, right? Because there's something that comes with that price,
Right.
all the time.
Well, also, people make promises that they don't know your situation, but especially as an agent, Chris would know, they call people, they get cold calls saying, oh, I can beat that rate, we can list your property for more than the value, when they hadn't even seen
They
the
don't know
property.
anything
They
about
don't
it. They
know
just want
the
you to call them.
situation.
Yeah.
What was I going to say? So to put it in perspective, right? How long you been doing insurance?
Going on, this my 10th year.
10th year. I'll go next because you'll be going. I've been licensed full time as a realtor for 24 years, right? How long have you been?
30 plus.
30 plus.
Yeah, 32, I think it is.
In all those years, how often have you seen interest rates between 2 and 3.25?
Yeah.
How many times?
Once.
When was that?
That was in 2000, early 2000s.
Right.
That time frame in COVID.
During COVID, right?
That was it.
So, my point being is, statistically speaking, for those of you that are analytical, statistically speaking, you're not going to see rates like that again. And if you do, you're talking about a major global
Something's going wrong.
financial, or health epidemic.
Something's going wrong.
So it's hard. It's tough. Hey, look, we're real estate, insurance, and mortgage coaches. It's tough love.
Yeah.
I would say take those thoughts about picking up one of those late rates, unless you're going to try to assume a VA loan or something like that, assume a loan, and just pick a goal for yourself of when you want to buy. Sit with a lender and say, well, first thing you have to do for you and whoever you're buying with, take a good hard look at where you can do this next week. We take a good hard. This is a good topic.
It's a good topic, yeah.
A good hard look at where you want to buy. What schools do you want to be close to? Where does your commute have to be? Where's your social circle, right? How much home do you need? Figure that out first, right? So if you want a detached home, let's call it a 70s built, split level. If you want one in Alexandria near Mount Vernon, depending on if it's been fixed up, you might be able to cop one between 5 and 7.25, 7 3/4. If you want one in Vienna, it's going to cost you $1 million, right? So you have to figure that out. Once you figure that out, then you talk to Sean. Why you talk to Sean next? Because now you say, Sean, here's the type of home we want to be. What is the mortgage associated with that?
Right.
Are you self-employed? Are you not self-employed? Forget about the rates, right? The only thing that matters is, can you afford
That's
the payment,
it.
right?
That's it.
And then the insurance people, I don't want to leave Cliff out, that's also important as well. If you're thinking about buying a second home, I know this is first world problems, do you really know what insurance is like if you want to be on the water versus 2 blocks off of the water, right?
And if you live in Tysons, you're not going to have the same home insurance rate as you would in Woodbridge or Dumfries, Virginia. It's just not going to happen. It's a different county.
So what's
it's
higher?
a different zip code. Tysons, Virginia.
Okay.
Absolutely.
Okay.
The cost of
In the city.
the cost of living is more, right? Also, just because your home insurance is $100 cheaper with Company A, Company B that costs $100 more, their claims response is better, right? The adjusters are better that they select.
So let's go
Right,
into it.
so
yeah.
I'm with Company B, you're with Company A, you save $100, we both have the same
Claim.
catastrophe and the same claim, but mine's is fixed right away.
Yeah, you wait
While you're
around.
still waiting,
Yeah.
but you're paying $100 less,
Yeah,
and your
right,
roof
right.
is still leaking and damaging everything else.
Yeah.
Yeah, you're on the side of the road waiting for that third-tier company
Right.
is pay out one driver for 100 miles.
So it's a girl
right?
about Uncle Red.
Trying to, seriously.
Yeah.
So, just remember, they're not making any more land, right? There are places that have more available land to build, right? But when you, in Virginia, once you get north of the Occoquan, the amount of land there is left to build goes down significantly. Arlington,
Goes to your
Alexandria,
point.
forget
So
about it.
the places that have the land, you got that's your commute. You got to factor all that kind of stuff in. You can't be in Arlington because you work in D.C. Now you got to be a little further out where there's more land. So your commute is an issue.
Yeah,
Yeah, lots to consider.
and just in case, I know this isn't a TikTok, we don't have 1 million followers, but there's always people that think, they were trying to get them to buy. What we've talked about, when's the best time to rent, right?
Right.
So not saying everybody should buy, right? Or not saying, but what I am saying is, don't let misinformation or the wrong thought process keep you from being in the market, right? If you're moving here, you're going to be here 2.5 years. You probably should rent, right?
Chris, I got a question for you on Sean. Came from my favorite lady, right? She's my favorite lady.
Hello, Mrs. Durham. Thank you for the question.
Yeah, she has a good question because, we've been in Virginia, but, we're New Yorkers, so we still don't know Virginia that like you guys. What is the best place to buy a second home in Northern Virginia?
So that's multi-layered, right? So first question is, what are you buying for? Are you buying it as a second residence? Are you buying it as an STR, short-term rental, Airbnb, Verbo? Are you buying it as an investment property?
Okay, well, I know what my wife
I ain't done yet. When I say you're buying it as an investment property, are you buying it as a flip? Are you buying it just to hold for the equity? Are you buying it for the rental income, right? So it's multi-layered. But I would tell you that there are plenty of places. So I think depending on your
You like
situation.
mountains, you like water?
Yeah.
You have to remember, a second home cannot be next door. It has to be 15 miles.
How many do you know? That's good.
And I will tell you that
You gotta be 15 miles?
50, it's 100. I think it's
5
100.
zero.
I think it's 100.
Or well, some areas are 100,
Yeah.
some is 50.
You have to be if you're doing second home, right? You do investment anyway. You do investment next door, but and your wife is talking about, you have to be near a resort area.
Yeah.
So, could we buy a home in Potomac Shores and where we live in Lake Ridge?
No,
Yeah.
no, that's called beating the system. That's what they're gonna
Yeah.
call that.
Yeah.
Huh.
Now,
I had
real
my
quick, I just
vote.
want to say hi to Nicoletta. You remember Nicoletta?
Yes,
Yeah,
she's traveling like a rock star everywhere. Hey, Nicoletta.
But now, it's all about intent, not to get sidetracked, right? You buy a home, you put on the contract, is the bar going to occupy the property? Yes, right? Something happens, you have to move out of the house 10 months later, right? That's fine. It's the intent, right? You can't do that, what you're saying, and say it's going to be an exact close, right?
Right.
But if you live here, and like you hit the lottery or something like that, and you want to move or do whatever, you can do that. You can do that. But just real quick, going back to this place. So with anybody, we would sit down, analyze what they're taking a look at, why they're buying the second residence, because there's plenty of people that have second residences.
Yeah, right.
I've got neighbors just like me that used to live next door to each other in Potomac Club, and now we live next to each other in Dumfries, right? So you still can have a second home, but it all depends on what your short-term and long-term goals. Flips are hard to find right now anyways, because there's not a lot of properties, because of the way the market is. Excited.
This is good stuff.
Yes. 23 minutes. Because of the way the market is, right? And you have to be so specific with your numbers. Where investors before, maybe they wanted the property 20 to 30% below market. Now you're seeing investors, flippers, they really want to try to get something 40% below market or more. And those aren't necessarily deals that you're going to find in the MLS. Those are your off-market deals. So,
Well, let me. No, that's all good. This is great.
No. We'll do it next week.
And let me just say this, since we're all in this, okay? So they're saying despite those barriers, right?
Yes.
Americans still attach a deep meaning to the goal of ownership, right? 57% associate ownership with independence.
Yes.
53% with financial stability, while 49% of first-time buyers describe it as achieving a major life milestone. And there's no wrong, right? Yeah, absolutely. I know my daughter, she's going to her second year now, I think ownership first, second. And it's a milestone. You know what I mean? She's got her piece of pie. Nobody can take that from her as long as you make that payment. Nobody's taking that from you.
Yeah.
You know what I'm saying?
You know, and again, you're never going to get more stability than owning your own property.
Mm-hmm.
You know, why do I tell people quite often why potential tenants are more picky than potential buyers? Because they can't change anything. And if they change anything or upgrade it, is it to their benefit? No. So that's why they go in the house and go, oh, can you do the blinds? Can you do this? And sometimes owners get upset. But hey, do they want to go in and put new blinds and 15 windows for them to move out in 12 to 24 months, and then you're going to rent it for hire for their blinds?
Right.
No. And the other reality is, and this is just my belief, Chris Logan, the collective, Max Allegiance.
Phone number?
I would rather be an owner in a financial downturn than a tenant.
Yeah.
Because the bank does not want your home, right? They
They
don't want your home. Depending on if we're talking about a worldwide thing, you think about the recession in 07, right? They were doing modifications, doing everything. You think about during COVID, they were also doing everything. They don't want to own your home as long as you communicate. You have to have some income. You have to have some income, right? But if you are a tenant and you get ripped, you get dozed, you get laid off, you lose your income, whatever the case may be, and you don't have an income protection plan from Cliff, then if it's an apartment community, guess what? 5-day, pay or quit. 30-day, court. 45, you're out of there, right? So you're definitely in a much better situation being an owner. So just stop, go back to Sean's original thing. Don't focus on the interest rate. Focus on your plan and devise a plan to get yourself there.
Yeah, that's real good stuff. How much can you afford a month? Factor all that and, go live happily ever after. Rates are going to do what they're going to do. So that's all I got, guys.
And with the rates, is that why credit criteria seem like they're being more flexible now? Is it because of the way the rates are?
What do you mean by flexible?
Like me growing up and just getting into this world of real estate and all that, is that if you didn't have a 700 score, just you're right.
Okay, here we go. So we can, as far as mortgages go, we can go down to a 550, right? So, but a 550 borrower, in America, they just open it up to more homeowners because of that push back in the 80s about the American dream. So you have more access to capital, but a person with a 550 to get that same rate to get a rate, it's going to cost you more than a person with 800.
Okay.
Yeah, that's like insurance, right?
Right.
All that's the same.
You know, the same company, but depends on
we
your
fall.
risk and your
Exactly.
score.
And bear in mind that 550 doesn't mean that you can have unpaid stuff, this, that, and the other. You've got to get all that way, but maybe it's somebody who's still on the path to recovery.
Right. Okay, guys?
Good, man.
We good?
Oh,
We're getting to wrap up. Awesome. Good day today. Okay, again, we're CSC All Things Real Estate, Mortgage, and Insurance. How to contact us again, email info@cscallthings.com. Our phone number 540-300-6277.
Personal numbers, we're gonna do that.
Yeah, so to reach me direct for any kind of question, no matter what it is, I got all kinds of questions, 540-809-6162. And if I don't know the answer, I'm asking one of my brothers, we're going to figure it out, okay?
240-476-3050. And in case I'm remiss, if you know anybody that's looking for 3-level colonial priced under $700 in Woodbridge, hit me up. I've got one on Zillow Preview. Check it out.
Awesome.
Clifton Durham, 703-609-8213. I am your insurance professional. I'm also your insurance hustler at all times.
All time. You're right. Quote of the day from the fabulous Tony Robbins. Quote, "The biggest source of motivation is contribution and growth." End quote. Let me read that one more time. I don't know if I got that. The biggest source of motivation is contribution and growth. I guess we giver's gain.
Yeah, sounds like giver's
gain. All right, guys, there you go. See you next week. Follow us on Facebook at Facebook/CSC and at all things _CSC Instagram. We will talk to you guys soon. What we got to do?
And while you're doing all that following and liking and leaving comments, drink some water while you're doing it. And mind your business. It's safer. And it's good for your health.
We will see you
Have a good
in
one.
7 days. Where's the music? Take us out. There it is. We do all the rights to this, don't we?
No.
Oh.
My brother-in-law is Amir out of
Happy anniversary!
On the
Happy
right
anniversary too.
Absolutely.
All right.
Poet, producer out of the Eastern Shore.
Have a good one.
Peace.